Hello and good afternoon. It is July 14th, 2022. My good friend Alex Cole, how are you today?
I'm very well, thanks. How are you?
Doing well. Recording this here midday on Thursday the 14th. Thanks everybody for joining us for this weekly installment of the Go No Go show here on StockCharts TV. If you're watching this on YouTube, thanks so much. Make sure you're subscribed to the StockCharts TV channel or check out the GoNoGo Charts channel as well. But I also want to encourage everybody to download the StockCharts TV app. You can take these shows and many other great analysts with you wherever you go. Alex, let's dive into what's happening in the markets these days. Summer doldrums still have a lot of no-go trends, but some interesting inflection points, particularly for emerging markets. Today, we're going to talk about gold, the US dollar, rates, and what's happening under the hood of the S&P 500. But starting from the top level, what are you seeing in the asset classes?
Yeah, really the same story that we've seen for the last couple of weeks. It is a much more risk off. We've got the equity markets going back to strong purple no-go bars. We've got commodities continuing in their no-go trend. And of course, Bitcoin has struggled for a while now. Treasury bond prices showing some amber go fish bars. So that one perhaps trying to get out of the no-go trend. And of course, the dollar racing to new highs, renewed dollar strength over the last couple of weeks, which we'll talk about in a little bit. That's going to have an effect and an impact on what's happening around the world.
Absolutely, everyone paying attention to that strength in the U.S. dollar this week. We're going to get to that in just a minute. But within the commodities space, let's talk about gold. Doesn't behave the same way as base metals or our agricultural products. Certainly not directly linked to the oil trade, but what we've seen from gold has really disturbed a lot of investors. Certainly what we would expect from all of our macroeconomics textbooks is that in an inflationary environment, this would be a safe haven asset, and that has not played out. Sometimes the signal in technical analysis is that when you expect something to happen and the opposite occurs, there's a lot of signal in that. What are you seeing for the trend in gold, Alex?
Yeah, really healthy no-go trend. When the no-go took shape here, we've seen momentum really stay negative since. We've retested the zero line, and with the exception of a couple of blips, we found resistance at the zero. And then when the oscillator got turned away significantly, that no-go continued. Since Monday, since the note went out, we've just dropped lower still on gold. Oscillator is oversold at -5, but new lows for gold prices.
Absolutely. And a quick review for anybody who is new to GoNoGo Charts. Alex, just walk us through the colors that we're seeing from the left side to the right side in that top price panel. What is that telling us?
When we're in a go trend, or when the market is bullish, we're going to see blue colors, either bright blue or a paler aqua color, signaling a little bit of weakness, but still a go trend. So we've got blue, bright blue for strongest go conditions. We've got aqua for a weaker go environment. And then in the middle here, you can see these amber bars. These are our bars of uncertainty. This is when there's not enough triggering in either a bullish or a bearish direction to tell us that we've got a trend in place. So when we don't see enough directional trend scenario playing out, then we paint the bars amber. Those are our go fish bars. And then when we hit the no-go trend, we're in a bearish environment. So we've got the strong purple and we've got the weaker pink again. So when the trend weakens, meaning we get a little counter trend rally, we may see these pink bars. And when the trend continues, in force, we'll see the darker purple bars once again.
Absolutely. So what we're looking at is a blended composite view of the most widely used and statistically back-tested indicators in the technical toolkit. We want to have that checklist that tells us the weight of the evidence is in our favor for a go trend, meaning all the conditions for a long position are favorable, or a no-go trend, meaning we could actually be shorting these securities. So we're in short territory on gold, and appreciate you walking us through that, Alex. Let's turn our eye to the US dollar. Sort of an opposite looking chart here as it just continues to climb higher in the face of what a lot of analysts expected to be a fading rally here in 2022. We're continuing to see dollar strength.
Yeah.
this week, reaching parity with the euro dollar. That hasn't happened in a long time. And we're actually above highs from 2002. So we've got a multi-decade breakout happening in the US dollar. What are the GoNoGo charts telling you, Alex?
Yeah, really just providing evidence for what you said. We've seen this trend this year really take hold. This is a daily chart we're looking at. We saw a few interruptions where we got some neutral trend information, some amber bars, but primarily strong go trend making higher highs and higher lows. And right now, another higher high. This counter trend correction hour didn't even phase us at all this time around. And we've gone to higher highs today as the oscillator is overbought.
Absolutely. Let's pause for a second and just talk about what's happening in that lower panel with GoNoGo Oscillator. First, talk to us about the difference between the blue and the green color on that oscillator line.
Yeah, so when we tried to build everything we could into this one chart, if you're familiar with GoNoGo charts, you know that we like to try to keep everything simple and keep our eyes focused on price without overwhelming the chart that we're looking at. And so we tried to build volume into the one oscillator line. So when the oscillator changes from this paler aqua color to a dark blue, that tells us that volume is heavy. So every time we see this dark blue in the oscillator, this is, of course, the ETF. This is the dollar fund. We see heavy volume when that oscillator line is dark blue.
Absolutely. So positive momentum for the US dollar anytime we're above that zero line, that objective measure of neutrality. And then we can see where we've got heavier relative volume on that trading. Alex, you mentioned the counter trend, those red arrows, counter trend correction icons. What's happening in the oscillator that triggers that little icon up in price?
Yep. So we've got a couple of icons that display on the chart based on the interaction of the oscillator and the trend. So the ones you're talking about, these red counter trend correction arrows, when we are in a go trend, if the oscillator gets overbought and then comes back below overbought, which in our case we use 5 as overbought, then we're going to see a counter trend correction arrow on the chart telling us that in the short term we may see a struggle to go higher. We've seen very fast movement, and now we're expecting some kind of reversion when we see that counter trend correction arrow. You see that happen again here. Oscillators moved quickly into positive territory, come back to neutral, and then this counter trend correction arrow tells us that in the short term we may struggle to move higher. Now, as long as the go colors don't give way to no-go colors, the pinks and purples, then the go trend is still in place. And then when we get a resuming of positive momentum, when the oscillator bounces off the zero line, then we get the other kind of icon on here, which are these green circles, meaning that while in a go trend, we've got momentum returning in that direction. Now, one thing we know is that overbought, or sort of that signal of overbought in a strong trend, we need to be wary of selling into that, because you're selling into strength. And so we often use these icons to just demonstrate enthusiasm. And so when you then blow past those levels again here, really strong sign that we got a re-entry into the trend when we've taken out these prior highs, and now we're racing off again to new highs once again.
Fantastic. Yeah, thank you for that explanation, Alex. And let's continue our march through some of these macro forces affecting today's markets. We've talked about gold and the US dollar. Let's take a look at rates with the TNX. US Treasury yields have just continued to climb. We had a little bit of consolidation last week as there has been some bond buying, struck into a new go trend. And here we are this week in an area of amber go fish territory on rates. What are you seeing, Alex?
Well, rates is a long-term move. That's what we're all looking at, right? We've been in this multi-decade downtrend in rates. We are rallying strongly all year, and even if you back the chart out to that super long-term chart, we do look as if we are perhaps breaking out of that long-term downtrend. On the daily chart, as we climb higher, rates climb higher, we're seeing these within trend, we're seeing these counter trend pullbacks. Now, last week, we saw enough of a correction that it actually allowed the GoNoGo trend to paint a couple of no-go bars on the daily chart, which was quickly followed, though, by a return to go bars. This week, like you said, we've gone into these amber go fish bars as the oscillators really started to struggle with the zero line. So we will want to see the oscillator get back above zero if we are going to see a continuation of this go trend. So we'll be watching to see what happens, right here. If we get rejected and oscillator falls lower, we may struggle to get back to those go colors anytime soon. But if the oscillator can break back into positive territory, don't be surprised if we see more go colors and attack on that prior high.
Absolutely. And so this is the daily chart of yields. Obviously, bond prices move inversely to yields. We're seeing some bond buying happening this week. Alex, let's jump this out to a weekly perspective on the rates, just to get a sense of that primary trend of where we are headed more structurally.
Yeah. So on a weekly chart, just a little bit longer time frame, we can see that the go trend in place. We're correcting against these highs. We see a little bit of weakness with the aqua go bars, and we're watching the zero line. So, a very typical play, how things are working out on the longer time frame. We're going to watch now to see if this zero line holds as support, as we know it should, if this trend is healthy.
Absolutely. All right, so let's switch our lens away from what's happening in the U.S. Interest rate environment. Let's take a look at EEM. It's been a while since you and I cast an eye outside of the U.S., specifically emerging markets, in the face of a really strong U.S. dollar. The gains that you'd see outside the U.S. tend to be eaten up by that dollar strength. When you bake in the currency risk. But what are you seeing from a trend perspective in emerging markets broadly?
Yeah, I mean, we're seeing new lows. We've just gone below the lows from May. So we're seeing strong no-go bars, these purple bars, strong no-go bars. Oscillator being turned away by the zero line, giving us these no-go trend continuation red circles. So we are in a strong no-go at new lows. Oscillator is falling in towards oversold territory.
Absolutely. So there's our word of caution to all investors who are thinking about global diversification. This is a tough market for emerging markets, but one of the things that Alex and I have really found a lot of value in is looking across comparative analysis of lots of other country level indices compared to the United States. So Alex, if we pull up that emerging markets RelMap, all of those country level ETFs against the performance of the SPY, there's something very fascinating peeking out in the bottom portion of these panels. So just review for us real quick. In the same way we were looking at the cross asset map before, those were the absolute trends of the different asset classes. These are relative trends of the countries against the performance of the S&P 500. So walk us through. I see a lot of pink and purple here at the top. Countries like Brazil, Colombia, Japan. But as we get into the lower portion, we can see China and Hong Kong. Talk to us about what we're seeing from a relative strength perspective in those markets.
Yeah, and we talk about it all the time, especially when we work with institutional portfolio managers. Often it's about being less wrong, right? So emerging markets definitely facing some headwinds from the dollar strength. But if you are a fund manager whose universe is the Asia Pacific universe, you may have to be invested. And so it's about moving your money, rotating out of the weaker performing areas and putting money to work where we have relative outperformance to try to minimize those losses. And we can see that China, like you said, and Hong Kong have been in relative go trends for some time and haven't given in to the rotation into no-go that we see everywhere else. Now, maybe they will, but at the moment, the relative outperformance is here.
Absolutely. So let's pull up a chart of the MCHI, the China country level ETF, just to take a look at what's happening on an absolute basis. Now, this isn't relative to the S&P 500. This is China on an absolute basis.
Yeah.
Fascinating moment here in terms of price level congestion. Right now, we're looking at the daily chart, and we see what was an area of resistance, right? We had traded below. We were seeing that resistance. The concept of polarity tells us that when we break above an area of price resistance, it becomes support, right? So that is an important key level, and we're retesting it yet again. Yeah. Alex, I see the GoNoGo oscillator is in negative territory for daily momentum. but we are still in that weaker go trend condition.
Yeah, we are in a weaker go trend condition, and this is an important point. Like you said, there is a lot of support from price congestion on the chart. The oscillator has gone into negative territory, so we would expect some support here for this go trend to continue. If it doesn't get it, then perhaps we'll see China roll over into no-goes, just like we saw with everything else on that RelMap. But at the moment, relative outperformance, a weak go trend still in place. So we're looking for support here to see if it happens.
You know, and that trade in May below the area of support really stands out when we switch this to a weekly basis, and we look longer term at how this has been an area of congestion for the Chinese market. It's been an area of support many times through 2019. It looks to me as though in May we had a bit of a fake out, a fake breakdown, perhaps shaking a few investors out of their positions. And here we are at a moment of retest to see if we can find support. Just a fascinating moment to watch what's happening in China.
Yeah, and it's like we always try to say, you cannot predict, you try to react responsibly. So for me, looking at this chart, there's two outcomes, right? One is there's a lot of support at this level. GoNoGo oscillator has been able to break into positive territory, which it hasn't for this entire time, if you look back throughout the chart since the no-go took hold. So yes, there may well be support here. On the other hand, no-go in place, lower lows, lower highs. If the oscillator fails to stay above zero and breaks back, if this level gets broken for a second time, then we may well see this no-go continue. So we aren't predicting. We're going to try to react responsibly. Will this level provide support, or can it not provide support this time, both of which would be significant information, of course.
Absolutely. And a great point. We presented yesterday at the Wealth 365 Investment Conference a talk entitled Forecasting Follies. And it does seem that the narrative machine is working overtime, financial news media trying to explain what's going on in often uncertain environment. So for everybody who's watching this and we're thinking about China, we really want to just make sure that we point out this is an inflection point. And we'll see what happens at this area of support to justify further investments down the road. Alex, let's bring our lens back to the U.S. equity markets. Let's pull up a chart of the S&P 500 or the SPY ETF, and we'll just look at the absolute trend of the index first, and then we'll get to that sector RelMap. So from the top level perspective, on a weekly basis, we're in a strong no-go. On the daily chart here that we're looking at, I'm seeing the same thing. What's picking up your eye, Alex?
Well, this was what was really interesting to all of us over the past 2 weeks. Was this rally about a month ago was enough to push the oscillator into positive territory, but it quickly rolled over, and we got a no-go trend continuation icon before prices made new lows. Now, this last sort of couple of weeks, we've tried to rally, but we really look like we're putting in lower highs than here. This time, the oscillator really couldn't get off the zero line. It blipped into positive territory, but we're really in a squeeze for an extended portion of time. Again, inflection points everywhere. So I'm looking at this thinking if this gets turned away by the zero line back into negative territory, we'll get a new no-go trend continuation icon at a lower point as we step through this no-go trend. So that's kind of my feel. But of course, if we burst into positive territory, then who knows? Perhaps we can go higher. But again, we've got to be careful, very, very wary of these relief rallies while in no-go trends.
Absolutely. We want to be prepared for both outcomes. On Monday morning, when we sent out the GoNoGo Research Flight Path newsletter to all of our institutional subscribers, we're reflecting on the events of last week and some outperformance in sectors like communications and consumer discretionary. We saw that relief rally and a sustained neutral level in the GoNoGo oscillator, telling a lot of folks that there was maybe some temptation to look back into the growth equity sectors for opportunities to get long. The caution that went out in Monday's newsletter was that defensive sectors are signaling something other than a return to growth equity. So, Alex, let's switch away from the absolute trend at the index level. Let's get under the hood and we'll look at the individual sectors of the S&P 500 relative to that benchmark.
Yeah, I think what we were looking at on Monday was, growth equities trying to outperform, but the defensive sectors really sort of saying not so fast because they are in sort of more persistent outperformance. And this is where we were. We'd just seen these couple of bars of weak outperformance on discretionary communications and technology painting an amber go fish. So that was the question. What's going to happen here? Are the growth sectors going to come back and start to lead? It hasn't worked out that way this week. We've got a return to underperformance from the growth sectors. XLK, XLY, XLC returning to no-go colors. XLC strongly no-go. And then you've got stronger go coming back for the defensive sectors. You got healthcare, staples, utilities, and real estate down at the bottom. So the question was asked, and then the question was answered, I suppose, by the defensive sectors.
Absolutely. Thanks so much for walking us through that. Again, those are the relative strength ratios with the GoNoGo trend colors applied. So moving on, let's dive into that XLC sector ETF. Let's look at the absolute trend of what was happening for communications. That was less weak than the rest of the index last week. And now we've seen a continued rollover into no-go trend. What are you seeing on this chart right now, Alex?
Yeah, I mean, this sort of little pop here, I suppose, was enough to suggest perhaps, that return to outperformance. But this is a very, very, technically traditional chart. If you look at this here, we've got the support at these lows. You've got it retested, becoming resistance. You talked about polarity just a few moments ago. You're seeing the exact same thing. Polarity here as this becomes resistance. And then the rollover, we're getting a no-go trend continuation today. So we'd look for, all else being equal, look for price to test and perhaps take out these lows from middle of June.
Absolutely. So at the very simplest level, and one of the things that we talked about in our presentation yesterday, for investors to really stick with their trading rules, if you simplify everything that we've been talking about in the GoNoGo show every week, consider just the trend and think about how if you were simply in long positions where you've got go conditions and out of those positions when they are in no-goes, you've got a built-in risk management system right there. We want to use that checklist, all of the weight of the evidence, and we want to keep risk management. That's the job one of all traders and investors. So when we see things like counter trend rallies, we see anticipatory excitement for growth equity sectors, a lot of speculative, maybe this is the bottom for communications. We can always rely on what the markets are telling us. Price is a fact. It's our most important indicator. And we want to keep that front and center of our charts. So no-go trend is pretty clear on all of these. Alex, let's take a look at one last chart, the chart of Netflix. Earlier on this year, David Lundgren and I had the pleasure of interviewing Laura Martin for the CMT's podcast, Fill the Gap. For those of you who haven't taken a listen, make sure to check that out. She was one of the only sector analysts, fundamental sector analysts, who had a sell rating on Netflix throughout this whole downtrend. And it was actually the day that Netflix bottomed out, major gap down, 37% lower from its highs. When all of the other sector analysts had finally downgraded, Laura had been touting that story for months. And it's because technical analysis tells you that for whatever fundamental reason, investors are not allocating. Netflix chart just did not support the ratings that most of the sector analysts had. So what are we seeing? I see a max squeeze on the far right side of this chart. We see a volatility contraction, a lot of anticipation that maybe the bottom was in for Netflix. What are you seeing on this chart, Alex?
Yeah, so this is the no-go trend that's been in place now for pretty much the whole year on Netflix, and you have to remember, like you just said, I think you used the term anticipatory excitement, right? You got to be very careful there because yes, you're looking for reasons, and if you're somebody that wants to take a long position, you're seeing a couple of amber bars, you're seeing the oscillator above zero, you're seeing you're seeing these lows as of right now providing support as the chart has moved mostly sideways. And we're seeing this as perhaps a basing pattern. And you see a little bit of bullish divergence with the oscillator making a higher low than price. But the weight of the evidence still suggests that we are in a no-go. So when this went out on Monday, the question was, is this actually now perhaps the start of something constructive? We were in a max squeeze and we'd seen these couple of amber bars. So we watched the oscillator to see if it can, in fact, break out of the squeeze into positive territory, which would then suggest we might test these highs, the highs from the range of this base. But instead, we didn't get that. We got the oscillator today breaking out of the squeeze into negative territory, and we're getting a fresh no-go trend continuation icon. So hopefully you can see how this keeps you away from making the mistake of perhaps getting in a long position too early. There's been some indications that perhaps the no-go is less strong, but it hasn't actually taken hold yet and given us anything to signal a go. And so when we see this now, no-go, strong purple bars, no-go trend continuation icon, we're saying, hey, we're still in the no-go environment, and we are not looking at Netflix just yet as something that's coming out of its base.
Absolutely. What a great tutorial in a case against bottom fishing. As trend following investors, we want to see some proof, some of the weight of the evidence switching to in our favor before getting into a long position. And of course, the breakdown out of that max squeeze in the momentum for Netflix signals a trend continuation icon and potential for further downside. Alex, thank you so much for taking the time to walk through all of those charts and deliver that education around how to use them responsibly. I want to invite everybody who's watching to join us Friday, July 15th, again at the Wealth 365 Investment Conference, giving a second presentation tomorrow at 2 p.m., where we're going to focus on the concept of relative strength, some similar charts that we used in the Beat the Benchmark special that we did for StockCharts TV earlier last month. And we hope you can join us, and we'll see you again next week. Be well, take care, and stay safe.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.